Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, we're going to be looking at commodities here and going to be keeping a close eye on gold specifically and miners for the second half of this year as things are getting real tight. We'll look at that in just a second. We're going to make a video specific to that for people newer to gold and miners at some point this month. And I think we have a bit of time before the key patterns break as they are mostly on the monthly time frame. But let's start it off with the dollar. So here's the weekly chart where the dollar formed a little mini bull flag and then saw a continuation after a very healthy brief period of consolidation. And the break of 95.03 was bullish, but there's still a resistance level I'm watching here, 95.15. It's almost a quadruple top at this point. This is very clearly the level that needs to break. But this pattern and the psychology of it, normally a cup and handle pattern, I like it as a continuation pattern in an uptrend. This is obviously coming off of a lot of downtrend, but the psychology is there with the inability to break resistance, the healthy consolidation of the handle, and now looking for this breakout into the upper $90 range. So the bulls definitely have the momentum in their favor. The question is, can they follow through? Definitely a bit extended in the short-term time frames to break that resistance with any kind of strength. So we may need to form a daily little higher low and then get that key break, because as of right now, it's a bit of a double top. You can see the 4-hour time frame, though, extremely overbought, just a huge move out of nowhere. And then we've got, well, not really out of nowhere. We had the FOMC, and then this was a bit of a delayed reaction. But there's a lot going on in the world of, watching the euro and watching what the Canadian dollar is doing. There's definitely a lot of opportunity out there because volatility is certainly picking up. So we have the healthy 4-hour consolidation tightening range right now. If we look at the 15-minute time frame, we can see at the end of the day, it was just an equilibrium pattern that had not broken yet. But even if we start with a bear break of 94.65 support, we're just going to look for a higher low to form and for the bulls to maintain control overall on the daily time frame and try and get that more convincing break of 95.15. So looking at gold on the weekly time frame just had a bear break of, well, actually had a bull break initially of the inside bar, and then the reaction to the strength of the dollar, generally inverse with gold, saw the dump. So we're looking down now at 1275.32, and then we're looking down at the low all the way down at 1236.37. So technically anything above that level will still maintain a higher low. And I'm watching the monthly pattern here on gold and on the miners as well, because what stands out to me, I don't normally I don't normally trade off of trend lines, but visually when I look at this pattern, this is what stands out to me. So I'll draw so you can see as well what I'm visually watching, and it's clear higher lows. And you can either draw a trend line right here, which would have us, depending on whether I put it a little tight or a little loose, depends on where we close compared to that level. But essentially, it's this level right here, that 1236, because again, the monthly time frame has been forming higher lows. It's an ascending triangle pattern with a horizontal resistance level in the 1370s range and clear higher lows. So this pattern is likely to break, I would say, sometime in the next, this is the monthly chart, so keep that in mind. It could go all the way through 2018 before we get a clear break here. But the bulls are going to have to show up sooner rather than later because we are only about 3 or 4% above this 1236 level. So the bulls need a monthly higher low, and they need to make their way back up into this tightening range into the low $1,300. So that's something I'm keeping an eye out for, but obviously the daily chart, the momentum is favoring the bears with this big push down and the bulls nowhere in sight. If the bulls, we now have a clear level. If the bulls can break this daily level, then I'm going to be looking for the potential that monthly higher low is forming. And this level is 1309 and 1307.65, essentially a little double top there as well. So that's my game plan, just watching the longer term time frames. But what we're watching is the miners. And here's GDXJ. And look at this monthly pattern, just so tight. This equilibrium has been playing out at this point for well over a year. And the longer the equilibrium pattern plays out, the more follow through the break is going to get. Very often, that's the scenario. So here's just the tightening ranges, and it's just a beautiful pattern. So we're patiently waiting for it to break. We have multiple inside bars to be watching. A break of 32.28 would be a bear break, but we would still be watching the higher low pattern down at 29.88. So the 29.88 is the must-hold level, and the bulls want to see a break of 36.08. Again, this could tighten up for the next 3, 4, 5 months. So not in any rush, but definitely knowing that volatility and opportunities to trade in either direction will pick up when this monthly pattern breaks. Checking in on oil, more weakness towards the end of the week. And again, generally it's an inverse correlation. Dollar strength means commodities weakness. The gold bears have been thriving on that pattern more so than the oil bears. But it's worth noting, higher low on the weekly to keep the uptrend for the bulls intact on this longer term time frame for oil is 61.84. So we're well above that level at this point. We'd have to lose another 5% in order to see that break. And we've already been consolidating for a month. So I am going to be looking for a weekly higher low to form compared to that level to remain in the uptrend. In my opinion, to change this weekly trend, we're going to have to set a higher low, a lower high, and then a lower low. And that would take a ways to play out. Our new key daily resistance is up at 67.14. Any bounce under that level is just another lower high, keeping the bears in control of the daily chart. And we have to change the trend on the daily chart to be looking for the weekly chart to form that higher low. So we close at the low of the week. We're looking down at 64.26, which broke by a couple pennies. And then there's that level on the weekly that needs to hold, 61.84. And we would get oversold on the daily time frame, getting down to that point if it were to happen in the next week or two. Natural gas had a really nice pattern. It's had multiple ones. First, this weekly equilibrium that was just playing out. And again, it goes back to the point of the longer an equilibrium tightening range is playing out, the more follow through you're going to get on the breakthrough. So high, low, lower high, higher low, lower high, higher low, lower high, higher low. Finally, the break. This played out from October 2017, and the break occurred May 2018. So 7-month pattern, and then follow through. So not only did we get the weekly equilibrium pattern after the breakout to calm down and reestablish a new price range, we got a daily equilibrium mixed in there as well. So some really nice equilibrium patterns with really clear breaks when they did occur. We had a triple top essentially, 2988, 2987, 2988. And as soon as we broke that, well, we actually broke multiple daily inside bars first, so there was an early signal at 2976. But if you wanted to be more cautious, waiting for 2988, we got big follow through, and we knew to be watching you guys for this daily equilibrium break, just like we were watching for the weekly equilibrium break. And now it is all bulls. And anything, in my opinion, on the daily chart, anything above 2916 is going to maintain daily higher lows in this uptrend. We are definitely in an uptrend now. The weekly chart was in a downtrend. It broke the tightening pattern bullish. The daily chart broke it bullish, and we're going to have to see a break of 2916 for the bears to get any kind of traction. So UNG and the leveraged version of UGAS is the instruments that are benefiting from this bull break. So we'll see how this continues to play out. We've got bulls looking for a weekly higher low in oil. Natural gas bulls are in full control on the daily and the weekly. We're looking for gold to try and set a monthly higher low, and we're looking for the dollar to try and break that little double top at 95.15. So I hope you have a good weekend. Happy Father's Day to all the fathers out there, and we'll see you soon.